Super hot.
Yeah, I try to look different from Wesley because Wesley always wears a suit, so I'm like, all right, how am I gonna stand out with Wesley? I'm like, all right, I'll just be the one with not a suit on. Maybe that might work.
So are you gonna record this?
Actually, we are live. Actually,
Oh,
yeah. So we are live now.
okay.
So, all right. See, so everyone's in there. Everyone's in the frame. Perfect,
Yeah.
perfect. All right. So welcome to episode 24 of the Qierre and Wesley Show. I'm your host, realtor and author of the Blueprint to Successfully Selling Your Home, Qierre McGlory. Along with me, my co-host, my business partner, my lender, Mr. Money Man himself, and Axia Home Loan Sales Manager of Orange County, Mr. Wesley Oliver. How are you doing today, sir?
Excellent. How are you?
Doing well. And today I'm very excited because we have a very special guest. I actually had the pleasure of meeting her at the Anaheim Chamber of Commerce. She's also an ambassador to the Anaheim Chamber of Commerce. She's a business owner, businesswoman, CEO of Victory Tax Help, Victoria Blasiak. Thank you for being with us today.
And thank you for inviting me on the show.
Yes, of course.
Happy to be here.
Thank you very much. Now, obviously, if you guys saw the title of the show, very controversial title, I thought only rich people have CPAs. Now, as I mentioned, Victoria is a CPA. So let's start with the beginning because a lot of people probably don't even know what CPA means. So what is a CPA?
A lot of people don't know what CPA is. And a lot of people think it stands for different things. Carries pencil around. Cute Perfect Angel, my favorite.
I like that one. Cute Perfect Angel.
Also, maybe certified payment that you know what? But
okay.
No, CPA actually stands for Certified Public Accountant.
Okay.
And so a Certified Public Accountant is a designation that you're given by the state of California. You have to pass a stringent test.
Okay.
We have the most difficult requirements in California than all the other states.
Really?
So my license can go in any other states, but no other states can come here. They have to take the license here. So very few people know that. There's so you have to take a test, and then you have to have 2 years of experience certified by another professional. So a certified CPA stands for Certified Public Accountant.
Mm-hmm.
We're licensed by the state, and we provide a variety of services to people. A lot of people think CPA is only for rich people, but no. CPAs are for anyone who wants a competent professional that's licensed, that has a bachelor's degree and has passed tests in accounting,
mm-hmm.
taxes, government audits, business law. We have a whole huge test that we have to take that encompasses all that. So what do we help in? We do tax returns for people.
Mm-hmm.
We help business owners.
Okay.
We help them keep their records. We help them if they have audits. And just individuals, we do consulting with them regarding if they want to buy a house, if they have tax questions, investments, all different kinds of things like that. And specifically, if it's not anybody can afford a CPA, and you can't afford not to have a CPA,
mm-hmm.
because usually we save people a multiple of what our fee is that we would charge for like a tax return.
Oh wow!
Yeah.
Okay. Now, so and what's the difference between, let's say, like a tax preparer and a CPA, or I heard something like a term called like an enrolled agent.
Yeah.
Is that like the same as CPA, or is that a little different? Or
they're a little different. They all are tax professionals,
mm-hmm.
but they all have different experiences and different certifications. So a tax preparer is also licensed by the state,
mm-hmm.
and they have to have, I believe it's 20 hours of education to become a tax preparer.
20 hours?
Yeah.
That's like less than a full-time job of a week.
Right, but they do, and it's all in tax law, so they do have a level of competence,
mm-hmm.
and for a lot of people, they can do their tax returns. They're not trained in accounting. They're not trained in bookkeeping. Most of them are not. They can. You don't have to have a degree.
Okay.
You don't have to have any type of degree.
Yes.
You basically take the course, pass it, and you can do tax returns. And usually, tax preparers will do pretty basic tax returns. Like an employee, W-2 employee, somebody who's single, somebody that doesn't have a complex situation.
Okay.
Somebody that maybe has a house with some itemized deductions. So they're not really trained to do corporate returns, business returns. So they can do like some maybe sole proprietors, some small businesses, but they have a certain level of expertise, and so they do service a certain level of society. And so, I never try to put anybody down. I mean, it is there's a lot of good tax preparers, out there.
Okay.
And enrolled agent. Now, enrolled agent, so that's called an EA. And so
Okay.
I'm called CPA, EA. People are like, oh, what are these things?
Yeah, definitely.
Well, enrolled agent has to take a test that's given by the IRS, and it's all about taxes. So enrolled agents are typically very good in taxes. They know tax law. The whole test is on tax law.
Oh, okay.
Okay?
Yeah.
And it's a difficult test to pass. A lot of people don't pass it. So a person, and when I see that EA, this person knows a lot about tax laws. They pass that test.
Okay.
So most enrolled agents, they want to do tax returns, and that's what they want to do. They want to have the next step up from a tax preparer. So they can do business returns, individuals, partnerships. They're very well versed.
Mm-hmm.
The term enrolled agents is kind of misleading because a lot of people are like, oh, that's kind of weird. Well, the IRS gives the test.
Okay.
And so the enrolled agent designation, that you can represent somebody before the IRS. That's what's called enrolled. You're enrolled with the IRS to represent people. And some enrolled agents do represent people, but a lot of them do not. They simply want to have that advanced designation for tax return preparation. And again, you don't have to have a bachelor's degree or any requirements, no work requirements. You have to pass this test. Again, a tax professional. Now, what is a CPA? A CPA, again, you have to have a test, and you have to have experience requirements.
Right.
And you have to have a bachelor's degree to even take the test as well.
Now, the bachelor's degree doesn't have to be like an accounting or some type of mathematics background?
No, it doesn't.
Oh.
It doesn't.
So you can be a political science major and be a CPA?
A lot of people have gone into different fields, and then they kind of, maybe they studied economics, maybe they studied marketing, maybe they studied science. Okay. And then they kind of, as they got into their career, they kind of, oh, you know what? I think I'll try this. I really like this. I really like doing, they're exposed to CPA somehow. And so, there are a lot of people that become CPAs that never really intended to.
Oh, nice. Well, it's nice to be able to get into that field and not really have to have a designated bachelor, because I would totally imagine that you'd have to have some type of mathematical background to become a CPA. But as long as you have a bachelor's in pretty much any area, then you can actually take that step to become a CPA.
Well, I don't know if this is still true on the CPA test, because I did take it, quite a while back. I've been a CPA for over 30 years.
Oh, wow.
But at the time that I took the test, you can't use any calculators. So I don't know if they still have that. Yeah. So you had to actually...
You actually had to have skills. You actually have to be able to add, subtract.
So they do give you problems. They do give you a circumstance. Here's a person. This is how much money they make. This is, they have a house. They have this. They give you numbers, and you have to put it together, maybe to estimate their taxes, or they'll give you an accounting problem for a business, and you have to figure it out and actually put the answer. So it's not, always like a multiple choice, and this is the answer. Yes. Sometimes it is multiple choice, but you got to come up with the answer. And it's very strict test. You can't look at anybody. You have to just sit there and focus on your test and coming up with the answers, on your own. They might have changed to allow calculators now, but you still got to know the process, how to do it. And,
absolutely.
And that. So it is a pretty strict test. CPAs do taxes. They do accounting. So another tax professional like enrolled agents, CPA are versed in accounting for businesses and corporations, partnerships, and all that. So it's considered more of an advanced degree, from an enrolled agent. We each kind of do different things. One of the main reasons that CPAs came into being in our country was, like, back in the beginning of our country, was that they basically did audits of businesses, and they gave their opinion on financial statements.
Oh, okay.
Okay?
Yeah.
So certified public accountant, and we would certify, and that is still what a lot of CPA firms do. A lot of CPA firms will do nothing but audits, but it also came into doing consulting for.
So what, I guess, for people that may not understand, like, what's an audit?
What's an audit? You're basically going through, a CPA will do certain procedures, reviewing the records, analyzing them, with the purpose of giving an opinion whether those financial statements that they have that show their profit and their loss are really accurate. Because that's what was happening back in the beginning of this country. You know, anybody could put anything on a piece of paper, and it still goes on to this day. I mean, all of us know about these big major companies that they had all this stuff on their balance sheet, income statement, and it wasn't there, and it turned out to be there's a lot of fraud. So CPAs are still very important in that audit function in our society, and that opinion of saying these financial statements, they look like they're fair and accurate and they're correct, because the public needs to rely on them. They need to rely on them lenders need to rely on financial statements in making a decision, and just on an individual tax return as well as a business. So it's still, CPAs are very important in a lot of our financial things that happen in this country, and that's just one little role, you know, that they play. And some companies, CPA firms, that's their major thing. But, you know, my specialty is solving tax problems and tax issues. And not a lot of CPAs do that, but more and more are doing it. And there's only 3 professionals that can do that. That's a CPA, that's an enrolled agent, and that's an attorney. So we are the only 3 that can really represent somebody before the IRS and negotiate for them.
Oh, wow. Now, I'm sorry for jumping so far ahead. I really want to talk about the beginning. Like, for instance, you have a really cool story where your name came from. So let's tell everyone how you actually got your name. I know your name is Victoria, but you do have a cool story of where your mom got the name from.
So. Okay. I wish my mom was watching it. She liked it. Okay. Yeah, my name is Victoria Blasiak. And so my mom had 5 boys, and she really, really wanted a girl. So, no, she had 4 boys. I was the 5th child, excuse me. So I was the 5th child, and so she was just really wanted a girl, was praying for a girl. And so when she had a girl, she said I was her victory. So she named me Victoria. Oh. And so that's how I got. And she also loved Queen Victoria and her independence and her leadership in a time when women weren't leaders and independence. And so she hoped that I would be like that. So she named me after Queen Victoria and named me after being her victory. And so when I was wanting to name my company, I really fight hard for my clients, and I try to take tax laws and regulations that are complicated and help people achieve victory over that. If they get caught in it and they owe something, a lot of people don't owe taxes on purpose. They don't know why. They don't understand the tax laws.
Absolutely. Yeah. I mean, it's not like it's common or anything.
Yeah, so. It is pretty common. Actually, I got some numbers for you since I am a CPA. There's over 14 million people in this country right now that owe taxes. It's actually 1 in 20 owe taxes. And so there's really a need for professionals to represent them and with integrity and do a good job for them. And so that's why I named my company Victory Tax, because I wanted people to have victory over their taxes and for them not to have to worry about it, for them to have peace of mind and be protected from losing their assets. I can tell you that many people have been devastated by owing taxes. It's ruined their marriages, it's destroyed their family, and a lot of it was unintentional. The government is one of the biggest collectors in this country, and they're very powerful. They can wipe out your bank account at a moment's notice. They can take 90% of your pay and leave you with a few $100s to live on. And this happens to people.
Oh, wow. I didn't know that.
Yeah. And families, like I said, it causes divorces. It causes families to split up. It causes depression, anxiety, a lot of health issues. And really what people need to do is, just like anything else, if you're not an expert in it, go to an expert and get help. So definitely you don't have to be rich, okay? And I'm here in Anaheim because I really want to serve this community, the population here. There is not a lot of resources available to people that have tax issues, but there's plenty of them right here in Orange County. So I'm here to help.
Yeah, that's great. Yeah, so obviously, like you said, one of the things that you do, well, you specialize is in solving problems and tax issues. So what's something common that you normally see when it comes to your clients that come with like tax issues?
Okay, well, what I see a lot of times is that people are audited by the government, and they try to represent themselves, and they don't know the policies and the procedures of the government, and the government hands them a tax bill, and they don't understand how they could possibly owe this money.
So when they do that, is it like they've already met with like either like a tax preparer or maybe like HR block or did something and file their taxes, right?
Mm-hmm.
And then that's when they get the audit. Well, they get the audit first.
No, so it's they've already filed their taxes.
Mm-hmm.
Okay, they've already filed their taxes, and then they get a letter from the IRS telling them they've been selected for examination. Examination is what the IRS calls it.
Oh, that sounds scary.
Yeah,
selected for examination. Jeez.
Yeah. So the lay term is an audit. The IRS calls it an examination. Now, a lot of times, people don't even get the opportunity to demonstrate that what is on their tax return is correct. So that's all the IRS is looking for in an examination. It's really, people get terrified, but they shouldn't be. All they want them to do is prove that what they put on their tax return is correct.
Right.
That's all they're looking for. But they have a whole process of doing it. And a lot of people don't keep documentation, especially now in this, era
digital,
and
paperless,
mm-hmm. and stuff like that. I mean, you can keep it on your computer, you can keep it on a flash drive, but they still like to see like those paper receipts to documents stuff. But if you do have it on flash drive, at least you have something to show them.
Right.
But a lot of people do not keep documentation or records, and so they'll claim donations on their tax returns.
Right.
Home mortgage interest, that should be an easy one to verify.
Right. Yeah.
But sometimes people get a second, or they take a other loan, or actually a lot of times what I see with home mortgage interest mm-hmm. is the loan's not in their name.
Oh,
it may be like they're paying the interest they're living in their parents' home and they're all helping out.
Oh, that's difficult.
Yeah, they're all helping out.
Mm-hmm.
So then the parents say, oh, well, why don't you take the interest? You're paying it. And they don't realize that the loan has to be in your name for you to claim the home mortgage interest. And that's in your industry. Many people,
wow.
They don't realize that.
Well, yeah, of course you wouldn't think about that.
Like, right. But I'm paying it. It's like, you're really kind of paying rent because it's really your parents, right?
Right, yeah.
So examinations are a thing that happens, and a lot of people are scared about it, and so they just don't respond. And when you don't respond, what they do is they just disallow all your deductions that you've taken, and they just send you a bill because you've given them no proof of what's on your tax return. And then people get this huge bill, plus they get penalties, on top of it.
So let's go back for 1 second. So when you get that audit, right, and you said that you don't respond, and you said they disallow all of your allowances that you took out of your original.
Yeah.
Wow. So interesting. Wow.
So a lot of self-employed people that are sole proprietors,
right, they
get audited. So let me give you some numbers, statistics.
Yeah.
So I could say probably out of the tax returns there that are filed, or they will make up a tax return for you too. That's a whole nother topic. But only usually 1% to 2% get audited. But if you're a self-employed business owner, that number jumps to 50%.
50%?
Half of the sole proprietors get audited.
Wow.
And so there's a lot of abuse on deduction, and the government knows it, in areas that lend to personal use, such as computers, cars, travel, entertainment. We're in one of the entertainment capitals here.
Oh, exactly.
Right?
And we do entertain our clients a lot, don't we, in the U.S.?
Yeah. So that's why the IRS laws are that only half of that entertainment is deductible, because they know people abuse it. So they audit sole proprietors a lot. That's done quite a bit, and those people really need help, because if you don't respond, they just send you a bill and they tax you on your gross income. They disallow all the deductions, and they just. So I have a lawyer that I'm representing currently on that. I have a human resources consultant, a pizza place. I mean, I could just all different kinds of businesses from, all walks of life. A contractor, just that they get audited, and if you don't respond, even sometimes when you do respond, the IRS is so busy, they won't even meet with you sometimes, and they just send you a bill. And then you have options. You have options of how you're going to address that. Are you going to appeal this? Are you going to try and, so I discuss those options. So am I going to do an offer to settle it? Do they really owe it? Do they not? So one of the first things that I do is I talk to the client. Do you really have documents? Do you really owe any money? Was your return accurate? And sometimes when I'm doing it, I find deductions that people could have taken and they didn't. So actually, I'll end up getting them a refund.
Oh, wow. That's great.
Yeah, because they didn't know that there were things that they could deduct that they didn't take on their return. I do a lot of real estate agents. A lot of real estate agents have a lot of expenses, but they don't know what they can deduct and how much. And so a lot of realtors get audited. And so I'll see on there, oh, you only deducted $5,000 or $10,000 for auto expense? No, realtors drive a lot. They use their vehicle a lot.
Absolutely.
The average realtor, I would say probably, it's not unusual for them to put 20,000 miles on their car. Not
all.
20
Not
to 30,000.
all. It's less than $2,000 a month.
Yeah. So realtors get audited a lot, but they have a lot of expenses, so they have a low net. That's why they get audited, because the government doesn't believe that your commissions were this, but your net was this.
Right.
Yeah.
Yeah.
So that's why they want them to prove those expenses. So a lot of times an audit can be good because people end up finding out that they actually, could deduct things that they weren't aware about if they have a professional reviewing it and helping them. But the first thing I do is, do they owe? Do they not owe? What's it really? What does their examination, entail? Do they have documents? Do they not have documents? Because if you don't have documents, there are other ways of getting their documents. Can we go back and get their bank statements? Can we go to their vendors and get receipts? Did they save them on their computer? Can we email and get a history of different things? So I try and use whatever methods I can to get documentation, for my clients.
So I have a question on the audit. Number one, are they random, or are there certain things like you would put in your return that triggers an audit? And then number two, how detailed should one be when we talk about, saving receipts and things like that? And what's the best method of doing that?
Okay, so let me address those questions. They aren't random, really. Basically, the IRS has a scoring system that they score returns. Okay. And they will give a return a score, and if it's over a certain amount, they pull that for audit. Like I said, 1% to 2% get audited, and maybe they might be some random, but when I say it's not truly random, because there's usually things that are unusual. So if you make $50,000 a year, the government knows that a certain percentage of that will be going to housing, food, things like that. So if your tax return is out of the norms for your income level, then it very well could be audited.
Right.
Okay. So they do have scores. So anything that's high or unusual for your income level and for your type of business as well. So, they look at that. So people that have a lot of meals and entertainment or a lot of travel, and people that have a certain amount of income and a little tiny net, and so they end up paying a small amount of taxes. Yeah, they run those through their system and they come up with scores and they select them for audit.
Okay.
So it isn't, they have their methods that they use, and actually they're very successful, at it. They're trying to, they want to verify the returns, but it also generates a lot of revenue for our government.
Well, absolutely.
Yeah.
Right.
Always looking for ways to get more money.
And so you asked me another question about
how detailed do you need to be when we talk about, your expenses and keeping track of them? And is there, what's the best method? Is there some type of software? Do you scan it into the computer, create a file?
Oh, okay. I'll talk about that. So the IRS is looking for you to verify what you put on your tax return. Okay. So we'll talk about realtors, since I'm here with realtors. So if a realtor puts that they had $10,000 in advertising, if you're under examination by the IRS wants to know exactly what makes up that $10,000. They want to know the date and the amount of each expense. So it can be multiple things, right, that make up that $10,000. They want a detailed list. It could be done on an Excel spreadsheet or anything. Could be written by hand. They're not so picky as to what order, the way that you give them that documentation. Right. They don't want, but they do want to know exactly what that $10,000 consists of. Right. And what it was, who you paid it to, what company you paid. Like, did you go to Staples and get business cards? Okay, that was X amount of dollars. That might not have been, very much, but you might have put an ad. You might have ads on Facebook, right, or Google, or things like that.
Good thing about Facebook ads is that it actually saves the receipts. So that's a good thing about Facebook ads.
But people will tell me, oh, well, it all went through my bank account. Right. Okay. So why do I need the receipts? I hear this all the time. Why do I need the receipts? It's on my bank statement.
Right.
Okay. Yeah. Well, not only does the IRS want to see that it's on your bank statement and that you paid it, they want to know that it was your bill, that it was your business bill, and it was for that business. So sometimes people will, maybe they bought business cards for someone else, their daughter, their son, another business owner. Or maybe they put gas in somebody else's car. Or maybe they bought a computer. So it's on there that they bought something at Best Buy, will be on their bank statement. But what they want to see is, what did you buy at Best Buy?
Oh, wow.
Okay? Or what did you buy at Costco? Right. Was it office supplies? Or was it clothes for your kids? Or this kind of stuff. So this is why they want the receipt to verify that expense was for your business and it was a legitimate expense for your business. They want to verify the payment. Two things. They want to verify that you paid that expense, okay, and they want to verify that it was for your business effort, and then it was not, you were not paying the utilities for your sister. Okay, so you say, I got this much in utilities, this much in phone. They want to see that it's your phone bill for your business, not your kids, not your wives, not your sisters. So you can scan receipts and keep them in a folder. There are apps available. There's all kinds of different, methods that you can use. But somehow when that day comes on the audit, they want to know what you spent it on, exactly that $10,000, and they want a receipt for it. Okay, but a lot of times if you do scan it, they'll want it printed. So the best thing that I can do to hand an auditor when I go in there, which is going to build a lot of credibility for you, if they say, I want to know what's in advertising, is I give them a spreadsheet, or if you keep a set of books, a general ledger, a detailed printout of advertising consists of this expense here, there, this date, and the total's up to $10,000, and then underneath, I got a copy of receipts that matches every expense on there. And then they're like going, oh, okay, you claimed $10,000. You spent this on this for advertising. You did Facebook ads, Google ads. You did that. You had a grand opening to promote your business. That might go under business promotion, advertising. Oh, and these are all the receipts from it. You're good. I'm gonna allow the $10,000, and it's really as easy as that. They just want proof of what you spent. Right. And if you give it to them in a big box, which people do, and the auditor's like, I'm not even going to look at that. If you expect me to put hours of my time and sort these receipts for you, no, they're not. They don't have the time to do that. They're auditing a lot of other people. They want to see, is your return credible? Is it a factual return? If it's not, then they're going to spend more time on you because they know they can get money out of you. But if you're one of the persons that you have all your ducks in a row and they see that and see, oh, okay, Qierre has all his records here for his advertising, his auto, his office supplies, his meals and entertainment, then they're going to move on from you and go audit somebody else where they can basically, assess them a bill and get revenue. So it's not always about trying to get money for the government. It's about verifying what's on that return. And when they see that somebody's credible, they have their receipts, and they move on. And they say, oh, okay, you don't know anything. It's called a no change audit. It's very rare, I've gotten quite a few actually, because people have documentation and I'm able to represent that. But also there's a strategy. Sometimes people will have, they'll have some records, but not all their records.
Right.
Okay. And that's probably the majority of people. But so as a professional representing someone, I will show their strongest records first.
Mm-hmm.
So if you had everything for advertising, but maybe not for another category, and I will show the auditor that, and they'll go, you know what? Okay, let's move on. I don't need to see the other information because you did have everything for other categories. Because they do have a time limit, and so that works.
Nice.
That works
absolutely.
It works to your advantage.
Yeah.
But they show them your good records first, so they can
Yeah.
see that, and they can get that. You know, you're not trying to defraud the government. You're not trying to get refunds of something that you're not entitled to.
Mm-hmm.
That you basically are a legitimate business person, and you know, business people can deduct expenses under code section 162, anything ordinary and necessary for your business that you spend to make money, and that's a big broad category, right?
Well, absolutely.
Anything ordinary and necessary.
So would you say like suits?
Mm-hmm.
Would that be considered that?
They have, so here we come. We got the broad category out here, right? We got the broad category,
Yes.
ordinary, necessary. And then they start chipping away and narrowing that down
Mm-hmm.
in the areas that people have abused it. So one area is clothing, okay? So ordinary and necessary, but then they have a little caveat.
Okay.
If you can wear it
Outside of the function of your job.
outside of the function, can you wear it on the street? Can you wear it there? So you get kind of a fine line in there. That's why you'll see a lot of people will put a company name or a
Mhm.
logo, because that's just specifically for the company.
Right.
So you might want to
I
put
got you.
Realty One on your, on your jackets, on your suit jackets, so you can.
There you go. I like
Yeah.
that. I'll definitely
so
do that. For
It
sure.
has to be something that's suitable for your business that you
Mhm.
can't really wear elsewhere. And a lot of people that are employees or business owners, they do have uniforms. Police
Absolutely.
officers have uniforms. Medical people have uniforms.
Right.
A lot of different jobs do have actual legitimate, uniforms, and some do not. But that doesn't mean their clothes aren't expensive. I mean, suits cost money, ladies cost money, everything. But can I deduct this? No.
Unless they had like your branding on it.
And now I do have a person here in Anaheim that I had some custom shirts made.
Mhm.
So when we have like Casual Friday, or I was at the Anaheim Taste of Anaheim, other events, I was at a business expo in San Gabriel Valley. So I wear those shirts that say Victory Tax, and they have my name. They have my company slogan on the back. Those are fully deductible. So I advise people, put your name on there, promote your business, and get a tax write-off at the same time.
Right.
Sounds good.
Yeah.
Need to make an appointment with my tailor. Bring in all my suits, have them all branded. Be able to take that tax deduction next year.
Right. And then is the person who prepares your taxes, whether it be a tax preparer, EA, CPA, are they ever accountable or held accountable for something on your taxes? So just to give an example, I've had clients in the past
Mhm.
that when I look at their tax returns for the previous 2 years, and they have the same job, it's an hourly job, it's a job that has no expenses.
Mhm.
But all of a sudden, this one particular year, there are itemized deductions, and now they have like $10,000 of 2106 expenses, right?
Mhm.
That's unreimbursed employee expenses for you guys.
Mhm.
So, I mean, like, I'm thinking, like, who is driving the ship here? Because,
So let's talk about that. So basically, you're signing that tax return
Right.
under penalty of perjury
Mhm.
that it's correct.
Right.
Okay. So the individual's tax return that it is, or the business,
Mhm.
you are responsible for your own tax return.
Right.
And you are responsible for your own tax. Okay. That's why it is very important to make sure that you have a professional that you trust, and that you're not judging that professional on how large a refund that you
Right.
get. And a lot of
Right.
people will do that. They go,
Mhm.
I went to, Joe Smith tax preparer over here because he got my friend back a large refund.
Right.
Okay. So they're like, I want a large refund too. Well, that tax preparer may be like artificially inflating those
Right.
expenses to get them to get them that large refund. And the person who's really responsible is the person whose tax return it is.
Okay.
So if they get audited, they don't have the documentation,
Mhm.
you're going to get the tax bill, the person whose tax return. Now,
Right.
do you have any recourse? If you have any penalties,
Mhm.
you know, you can ask them to pay that. And it would have to be like if you really felt that they were responsible, it would have to be like a civil lawsuit, because
Right.
you're responsible, you're signing the tax
Okay.
return. But there are preparer penalties, and let's talk about due diligence. And that's one of the things that a CPA is, we have ethical standards in our profession
Mhm.
of due diligence, okay? And which means that basically, whenever we're preparing somebody's tax return, we're going to have to use our due diligence, all our professional knowledge,
Mhm.
that if you walk in and tell me, oh, I had 100,000 of employee business expenses, you know, and it's like 2/3 of your income, you know, I'm going to say, you know what, Wesley, I need to see that. Okay,
Right.
I need to see that. So, and I can't do that unless, you know, you show me some type of document.
Mhm.
I can't prepare the return. But tax preparers, enrolled agents, really, people can walk in and just say, these are my expenses, and they do the return, because it is your responsibility.
Right.
It is your responsibility. Enrolled agent too, you can give them any numbers and go,
Mhm.
okay, you're representing me, these are your numbers, okay, you're signing the return, and it's based on the information that you've given me. So, you know, the number one responsibility is with you. There are preparer penalties for knowingly doing false things.
Mhm.
The IRS has what's called a PTIN system, preparer identification number.
Mhm.
So there are preparers that will put false deductions on people's tax returns so they get a refund.
Right.
And so when the IRS finds that out,
Mhm.
they will start auditing all their clients.
Mhm.
Oh wow.
Okay. And then they will not allow them to prepare tax returns again.
Right.
If they find that it wasn't just an honest mistake, and it wasn't the situation where the client gave them the information and
Mhm.
they didn't verify it, they don't have a responsibility to verify it. It's really you're giving them that information. CPAs, like I said, have a little bit higher a higher bar for due diligence.
Mhm.
Like, so if somebody comes into me, a lady came in and said, you know, my son's disabled.
Right.
Mhm.
And, you know, I want to take this permanent disabled credit. I said, okay, I need a letter from a doctor saying that your son's disabled. I said,
Right.
She said, I don't have that. He's in a special education program. I said, I need verification.
I mean, that seems that would be pretty easy to get. I mean, if you have a child that's disabled, you should totally be able to get a doctor to write a letter explaining that. And also, if your child's in the special education, you should totally be able to get documentation for that. That, for me, that seems like that'd be like kind of an easy thing to acquire.
You would think,
Mhm.
but so the fact is that she goes, well, I guess he is disabled,
Mhm.
and you know, he's a slow learner, which she said.
Okay.
But I said, well, is he disabled enough for a doctor? And she goes, you know what? I don't know. I don't think he is disabled. I'm his mother. I see, and I'm not wanting to downplay any disabilities. There
Mhm.
are, you know, ADHD. There's all type of different
Well, absolutely.
things. But she said that, yeah, he's never been diagnosed at having any of those disabilities. You
Right.
know, he's just been called a slow learner. He hasn't been diagnosed with any type of disability. And then we can't claim that. So I suggested her getting him diagnosed, taking her to a doctor that I can't claim. Now, if she would have went to a tax preparer, they might have just said, okay, your son's disabled, because it is up to the tax preparer to provide the proof. Okay. But CPAs have a higher level where we're supposed to use due diligence and reasonable care in preparing a tax return. So I might say I can't prepare your return that way, and then they could go to a tax preparer up the street that doesn't have the same legal requirements as I do as a CPA, and that preparer can prepare the tax return and put down that, you know, they're entitled to that disability, because they're relying on their word.
Absolutely.
And they're signing the tax return. So, you know, you get all kinds of, you get the gamut when you're doing tax returns. You get, you know, people that just want to pay their fair share, but yet who wants to pay more taxes than what they should? Nobody does.
Right.
So, you know, I try and get the lowest legal amount that somebody has to pay. I don't ever want to do anything fraudulent or claim something that shouldn't be claimed. I could lose my license over that. So we're held to a higher standard. But at the same time, I don't want my clients to pay more taxes than they should. I want them to take advantage of the laws that are out there, the deductions that are out there, and pay the lowest amount of taxes that they legally should. And a lot of people don't know what that is. Like I said, we talked about ordinary necessary. They limit it on clothing. They limit it on cars. They limit it on computers, items that have been abused in the past. They limit it on entertainment. So areas that taxpayers have abused in the past, that is the area that the IRS makes regulations to, to control that.
Like the home office, I know that's a big abuse.
The home office.
Yeah. Oh yeah, that's a slippery slope, I've heard.
Yeah. The home office, that's a flag. The IRS has certain audit flags. Okay, and sometimes people say, "Oh, I have a home office," and that could be a flag for an audit because a lot of people have abused that, right? So
wow, so maybe to your best interest not to put that up there.
So I tell them, give me the information, and let's see how much of a write-off. Because for some people, maybe it saves them $300, $500 on taxes. It just depends. Are you renting? How much of your home are you using? You have to figure out the square footage. So if you're using a very small area of your house, there's rules. Are you using it regularly, consistently? So is it worth it to save $300 on your taxes to have a flag for an audit? I'll let people know that this is how much you're going to save on your taxes, and it's really up to them. You have to have documentation. So do you want to have that flag for audit? Do you want to forget it? You know what? No, I'd rather not take something that could be, that could cause an examination.
Yeah, you don't want to have those red flags. I mean, it's probably better not to get the $300 as opposed to.
But you're
having that flashlight on you all of a sudden.
But you are entitled to it. So I do tell people you are entitled to that. You can take it. It is legit. It is a legit deduction, but be prepared that, you need to keep all your expenses. So I have a tax preparation agreement. So I tell people that, the burden for substantiation is on you. And so that you keep all your records. You should keep them for at least 7 years and keep them separate by year. Each year kind of stands on its own. In the event that you are audited, you do, have the documentation.
So, and I know another big one too that a lot of people don't talk about is the mileage. I had one of my old employees, he got in trouble with the mileage because they were looking at his job description and he wrote out something like 40,000 miles. Like, what are you doing? That's like 10 round trips from LA to New York. Like, what are you doing?
That is an area that's abused. That's why they have these rules on auto. Auto is an area that's typically abused a lot. And, the IRS has some norms. And there's norms even, you could go and Google them. What does the average person drive? The average person who's not self-employed or a realtor drives about 12,000 miles a year. Okay, so that's an average. So if you're claiming 4 times the norm, that's a lot. Now, realtors will have 2 to 3 times the norm. Okay, so the IRS knows this. They know that. But they still... if you're audited, you should keep a record of where you go. Now, it doesn't have to be, it used to be that they made a rule that you had to do it contemporaneous, which meant you had to do it the day you had to keep a record every day of everywhere that you were going.
Like a mile log.
Yeah, like a log. But it was a contemporaneous, meaning that you had to do that the day you were driving there. Because a lot of people will keep notes and then they'll go back and update their log. So they went back and changed it, that you had to have records. That they took out the contemporaneous. It does not have to be done at the time that you're actually driving there. But you should keep a log, and there's all kinds of cool apps for that. That'll be like Start Now and Now, that will help you. So in the past, we didn't have these tools available. So there were little books, and things like that. So I would tell people, keep one of them in your car, So keep your little log. But now it's with mobile phones and all the tools available. It's much easier. You can have an app, and there's like a number of them out there. There's a lot of free apps for that. There's ones that you can pay, but I don't recommend a particular one. But I do tell people keep track of your mileage, because if you claim over those norms, then it's a big red flag that you're going to get audited, just like it was for him. And I represented somebody in an audit recently where I had to go to the IRS office in Los Angeles, and they only allowed for auto what actual records that the person had for auto expenses.
Oh, wow.
And basically this person, a lot of their records were destroyed.
Oh, no.
And they were destroyed and damaged by water damage. So we did prove that. So maybe they were a little bit, more lenient in that, but she didn't have any mileage records at all. So they're like, well, let's see what you actually spent. So then we went with bank statements because there were no receipts. I said, you got to look at her bank statements and allow these because we could prove that the records were destroyed.
Right.
Okay. So in that case, so like I said, there's other ways to prove stuff sometimes because they look at that. The IRS, they're not as cold-hearted or as people think it could be. So my job as a professional, is to tap into that heart of that IRS employee and get them to look at the person's situation because everybody has unique situations.
Absolutely. We're not all the same.
No, we're not all the same. We don't have the same jobs and things like that. Each profession has different things that they have to do in order to gain income, to service their clients or sell their product. And a lot of time people owe taxes because something happened in their life. Maybe someone got sick, maybe somebody passed away, maybe their business was embezzled. I get a lot of those, a lot of different things happen. Maybe sometimes people have addictions, drug, alcohol, gambling. So you don't think about this when you think about taxes.
No, not at all.
Right? You don't think about these things.
No.
But this all comes into people owing taxes. Maybe they didn't file. Maybe they gave the wrong information. Maybe they did it themselves. Or maybe they thought that their taxes were paid.
Right.
But their bookkeeper embezzled and covered it up with the payroll taxes.
Oh, wow.
So they didn't pay the payroll taxes and they filed their returns and they're hiding it from the boss. That can go on for like a year or two.
Right.
Until something, and they can, because if they're a person that's working in the office, when the government's sending all those letters, they can throw them in the trash. So the owner is not aware of it until they're actually taking his money out of his bank account. And it's like, whoa, what's going on here? And then all of a sudden the bookkeeper is like, oh, I have to leave. I got another job, or something like that. Or sometimes it's a relative. Sometimes it's a good friend. And then the IRS, they do consider that. They do look at embezzlement. But they looked at, as you as a business owner, you were embezzled. So we're going to say, we're going to be more understanding about you didn't intentionally not pay your taxes. You thought they were being paid. So maybe we'll waive all these penalties, but you still owe those taxes.
Right. You have to get them paid.
Okay. But they look at, did you file charges when you found out? What did you do after you found out you were embezzled? And a lot of times, did you file charges? Did you make a police report? And sometimes business owners will not take these steps because they're so hurt that this person embezzled from them. Right. And it might be a family member, it might be a close friend. So you really should document things and look at that. And so I was able to get a electrical contractor settled taxes that were several $100,000 because he was embezzled by one of his supervisors. And when they found out what was going on, the government did try and put all the taxes on him as an individual, but also a lot of people don't know this. Anybody who's on a bank account, the government for a business, if that business doesn't pay their taxes, they can go after those check signers. Because, a lot of people do not know about that. So be very careful before you're a check signer on somebody else's business. Even as an employee. So the secretary there, she was on the bank account. So the owner was on the bank account, and he had another person that was on a bank account. Right. And the secretary was there. And they had procedures where anything over 500 required 2 signatures. Okay. And but the secretary would prepare all the checks, and she would sign them. And then she would have the owner or another person sign the check.
Right.
Well, because this secretary, who didn't make very much per hour, because she was a check signer, the government went after her personally for $100,000.
Jeez.
And she was working at another job, and she started getting garnished, and she was like, "Oh my gosh, it wasn't even my business." And so
now was the government like sending notices to that business, but she wasn't there, and then that's when they started garnishing? Was it kind of like that or something? Or
it was actually a couple years later that that she was working somewhere else. And
wow!
It took some time for the government.
Right, so she didn't even know anything wrong was being done.
Well, no, she actually, when she was working there,
Mm-hmm.
she discovered the embezzlement, discovered that the taxes weren't paid, and so this is why I was able to help her get totally off the hook, even though she was a check signer, because when she found out and
Mm-hmm.
discovered what was going on, that there was embezzlement and taxes weren't being paid, and even though the government said, well, you were a check signer, you had access to the money, you could have paid.
Right.
Okay? That is their premise of why they go after a check signer, because you have access to assets that could have paid those taxes.
Yeah, but I mean, you're not even at that level, though.
You're
You're the secretary.
But
I mean, not like one of the business owners where you can...
But
you know?
So they figure you're important because you're on that bank account.
Right.
Wow,
And-
okay.
And you have access.
Yes.
So, I talked to her and I said, tell me what went on. And she found out, and she told the owner, and then she called the IRS.
Mm-hmm.
So what it turned out is I wrote this letter to the IRS, and the IRS actually called me and said, Victoria, we've never seen a letter like this. Of course, we're going to let her, she's not going to be a responsible party. We've never seen a letter so well written explaining, what went on with this. So what happened is I talked to her, I talked to the owner. She was the only person that tried to do anything to help the situation. Once she found out, she was like, this is horrible.
Mm-hmm.
This is like horrible. This person that was a trusted supervisor, the owner, has been embezzling, and we thought that payroll taxes were being paid. This person put on fake employees too.
Oh man.
He was given a lot. The owner treated him like a brother,
Mm-hmm.
and he was given a lot of responsibility for hiring and firing and things like that. And this is a pretty large company, and they had a lot of employees. So she's in the office. She didn't know exactly who's on the job
Mm-hmm.
site and things like that. So so it's kind of a sad story because the owner was so hurt by what happening. He lost hundreds of thousands of dollars.
Mm.
This supervisor was also ordering materials, and the company was paying for him, and they were for his brother's company, his brother's construction company.
Mm-hmm.
And that's how they lost hundreds of thousands of dollars, because they couldn't understand why this job, they made no money on it, and they had so many expenses.
Right.
And the supervisor was in charge of the job, and that's what, it ended up coming out. It created all these problems for the company.
Mm-hmm.
The owner of the company ended up having a heart attack and dying. Yeah, so tax problems can be very devastating to people,
Mm-hmm.
but the underlying reasons are can be a lot of different factors: poor cash flow, embezzlement,
Right.
policies and controls not in place. There can be conspiracy between different employees to cover up things. So that was very unfortunate. But the secretary, and the reason she was put on there is because she was his daughter.
Oh.
Okay, so
The daughter of the
owner.
Of the owner. Okay, not the crummy.
Not the
Okay.
supervisor that embezzled. So the daughter of the owner, and she did everything she could to work things out with the IRS. She called and explained.
Mm-hmm.
She explained what was going on.
Mm-hmm.
They did try to get criminal charges, but he had given him the authority to do all this, so he died before they could even bring charges against this person and testify, but they gave him a lot of authority.
Mm-hmm.
And so sometimes it's like, wow, some people will steal and rob from other people, but it's like you gave it to him. You know, I had another client where he gave a woman $50,000, and then he reported that she conned it out of him, but the police department was like, but you gave it to her. It's not against the law for you to give somebody, you know, money.
Right.
You know, you could have said no. You didn't have to go get it. But she conned me, you know, out of it. He really had no recourse. He was an elderly gentleman, and these people took advantage of him and scammed it. But at the time he went to the police department, there weren't a lot of elder abuse laws or things like that at that time. But yeah, but I was able to get the daughter entirely off the hook because I wrote a letter explaining everything that she did to resolve the problem. So the IRS does look at that. When you found out that there was something going on in your company, what actions did you take to remedy that?
Right.
You know, did you, if you found out there was cash flow issues, did you cut back your staff? You know, did you make your product line smaller? What steps did you take? And they do look at that, and they do consider that. But that was a whole big mess because she was the daughter from his first wife, and a lot of the staff there there were 5 other brothers and sisters that worked in the business.
Oh wow! So like a huge family company.
It was a huge family company.
Yeah.
And because of the supervisor that was not related, that the father had trusted, it ended up the whole family lost their sister. But it also, I mean, their father, a lot of finger pointing went involved because all the rest had the same mother and father. She was the only one that had a different mother. And so they were like, the other brothers and sisters who they were all really close, they started turning on her and going, yeah, we'll let you be on the hook, okay? We'll let you be on. So they kind of didn't want to help her because they thought then they were next.
Right.
They were next in line to be on the firing line for the government. So it was a lot of stuff goes into tax issues. It's very complicated. It's very emotional. And that's another thing. You do not want to represent yourself and call the government. And when they're trying to explain to you, you know, what your options are and stuff like that. And it can be a very adversarial type of conversation when they're telling you, if you don't pay this by this date, you know, we're going to garnish your wages. So a lot of people get very emotional because they know it's going to dramatically affect their family, their livelihood.
Right. Absolutely.
They get mad at the IRS and they start, you know, talking mean to them. Maybe they might even swear or things like that. The IRS documents every call, so does the state, and they will put that in there so that any other time that you call, they're going to see that and go, oh, this person was really rude. They were cussing and swearing. We are not going to work with them at all. And they do that. They keep a log. So, So when you hire a professional, you know, I can be not emotional about it, but I do fight for my clients as if it was my money, as if it was my bank account that was going to be garnished, as if it was my wages. So I'm very passionate about representing people and helping them and letting them know their options that are available to them to resolve tax issues, which there are many. There are options available, and people just don't know. They don't know what to do about it. But I'm here to help people and give them victory.
So a couple more questions. So number one, what is usually the lag time on an audit? So like, let's say if you just filed your 2017, like how long would it take for them to put it through their little formula, their mathematical equation to determine whether or not you go in that bucket? And then secondly, is there a statute of limitations on when they can audit you for a previous year?
There is statute. So I'll answer all your questions. I think when the tax return goes into the system, I think it's called a diff score, that it gets scored right away, but they don't act on it right away. So the government has 3 years. Okay, they have 3 years to select that return for examination.
Okay, wow.
But here's the thing is that they can, and they often do, if they find something in the year that they selected for examination, they can expand it to the year before and the year after. So they might pick a year in the middle. And if they look at your return and you have receipts for everything, well, they're going to say, okay, we're done with that year, and we're going to move on to somebody else. And they also have they have different regulations regarding to protect taxpayers. If you're audited and they don't find anything, they can't audit you again the next year for the same issue.
Okay.
Because they just audited you and you had documentation.
Right.
Yeah.
Right. So they can't audit you for the same thing. If they audit your travel or your auto expenses and you had documentation for everything and it was fine, and if they send you an audit for the next year, you can go back and say, you know what, I don't think you should audit me because I was already audited.
Right.
And a lot of people don't know that. They don't know that. They think they're just going to be audited year after year. They can audit you repeatedly, especially if they find something, because now they know that you claimed expenses that you shouldn't have and you don't have documentation.
Right.
But they often do expand it. But here's another thing. You're not always safe because the government will they'll select a return for audit within the 3-year period. But maybe say it's near the end of the 3-year period and they send that letter out. So then they kind of hold it over the taxpayer's head saying, you know what, we need you to consent to a waiver of the statute so we can complete our audit on this.
Oh,
and then people are like going to go, oh, well, I don't want to sign the waiver. It's too bad you didn't audit it in time.
Right.
Well, then they're just like, okay, well, we'll just hand you a $50,000 bill right now.
Oh, wow.
So that's so sometimes it's to your benefit to sign the waiver so that you have an opportunity to present all your documentation and go through with the audit properly and let it go through the normal channels. And another comment I wanted to make is that a lot of people think that it's like the court system. That you're innocent before, that you have to be until proven guilty, that you have to. It's the opposite with the IRS.
Right.
You're
guilty until proven innocent.
Yes, you have to prove that you have documentation for whatever you're claiming. You have to prove that to them. It's not up to them. So the burden of the proof is on the taxpayer, not on the IRS. It's very different than the court system. And a lot of people are thinking, well, how could they say that? How could they do it? They're a government agency with a lot of power and a lot of regulations. But I've been doing this for over 25 years. I actually started doing taxes when I was 15 years old.
Oh, okay.
Yeah, I grew up in San Gabriel Valley, and we had a course. It was in our social studies. History teachers spent a quarter teaching us how taxes worked.
You know what? I wish they would still continue a program like that in school, because that would be totally beneficial for people.
It would.
Yes.
Yeah. So they wanted kids to know, how taxes work and how to do a basic tax return.
Right.
So to this day, so I learned them when I was very young, and I have kind of a unique skill that somebody can give me their tax situation and I can kind of add it up and ballpark it, and I can kind of give them an estimate just here on a piece of paper.
Oh, that's great.
Because I know how the tax formula works.
Yes.
Right.
But we have a recent law, though, that the Tax Reform Act is now changing that basic system that's been in place for years, getting rid of the personal exemptions. So no more personal exemption. So part of the tax formula for years, take all your income, subtract your deductions, and then subtract those personal exemptions to get your taxable income. That personal exemptions are gone.
Right.
And now there's a larger standard deduction, larger tax credits, for child tax credit in place of that. So that is a big major change, and a lot of people are scared and worried, how am I going to be affected by this new tax law?
Right.
And it's really it affects your industry. There's limitations on mortgage interest. There's limitations on property taxes. So now people are thinking, should I still buy a house? Is that really, is it going to be beneficial? Well, it is, but it depends. The answer is it depends on your situation. So the tax software that I use, everyone I did taxes for 17, we have a feature in there that shows this is what your tax is this year under 17. This is what it would be if you had the same situation next year. And it's different for every person. Some people owe more. Some people get a larger refund. It just depends. So, I do have people that want to come to me and do some tax planning to say, okay, how much am I owe, next year? How is the new tax law going to affect me, personally? Am I going to get to deduct my property taxes? Am I going to get to deduct my mortgage interest, all of it? how is getting rid of these exemptions going to affect me? And it all depends on your situation. What about my business? I heard that my business will pay less tax. So it depends. Are you married? Are you single? Do you have kids? How many, because that still comes into play your filing status. Married people are going to get a larger standard deduction, $24,000, where it was about $12,000 before that. The child tax credit was $1,000. Now it's going to be $2,000 per child. So a particular person that I did yesterday, it turns out that they'll get $1,000 more under the 2018 because they have children and they're going to get twice the child tax credit.
So you're saying that Wes needs to have like 4 or 5 more kids?
There you go. Then he's going to have to buy a house to support him. In Orange County, that will put you over the mortgage interest that you can deduct, right?
Probably. Well, I'm probably pretty close now. So I'm glad you brought up the word tax planning, because that'll be my next question. What is involved in tax planning and who should do it?
Okay. Tax planning simply means instead of being proactive, being reactive to events, or instead of going out and taking a particular course of action.
Right.
And this applies really to real estate. Instead of just doing something, tax planning is like looking at the implications of how much taxes you will owe if you decide to take a certain course of business, of action, or if you're a business owner, you really should do tax planning several times during the year. Am I going to, what's my tax liability now? What's now? And really towards the end of the year, look at it and say, oh, I made a lot of money this year. I'm going to owe a lot of taxes.
Right.
Victoria, what can I do? What steps can I take now to minimize this?
Right.
Or if it's the opposite, wow, I lost a lot of money, and so I'm not going to owe any taxes. So I had a big loss this year, but I paid a lot the year before. So what can I use this loss? Can I carry it back to other years to get tax money? Can I carry it forward? So, tax planning is simply basically putting your events maybe in order to minimize your taxes.
Okay.
And a lot of people don't do that, especially when it comes to real estate, or say they took their retirement out. They don't think about, if they would have rolled it over into another account, that they wouldn't have to pay taxes on it. Usually people are reactive when they get a tax bill or after they do something. They're like, oh my gosh, what did I do? How do I deal with this? But so, one of the great things is that if you think about it and plan ahead of time, you can minimize your taxes a lot, especially with real estate sales. So ways that I help in that is that if somebody's thinking of selling their home and say, let's take a look at it and see what the tax consequences will be. And people, they don't realize that, you get a $500,000 exclusion on gain if you're married filing jointly.
Right.
But there's kind of rules about that, how long you have to live in the home and things like that. But here in Southern California, properties have appreciated tremendously in the last few years. So many people are over that $500,000.
Right.
So then, so when they see that in black and white, well, you have this $500,000 excluded, but now you have another $500,000 that's subject to tax, and this is how much the tax is going to be. Right. Let's just say, round it off 40%. This is round off. You're going to pay $200,000 out of the $500,000, and they're like, oh, but maybe I shouldn't sell then because I don't want to pay that to the government. Right. But there's calculations. There's other factors that come into that. It's not just what did you pay for your house? You get to add all the improvements on there that you made to the property. A lot of people don't know that.
Yeah.
That there's other factors that come into that calculation of how do you calculate the gain on the sale of a home? How do you calculate the gain on the sale of a rental? And so for a lot of people, I'll suggest doing a tax-free exchange. So I have a client now that she had a rental in Los Angeles. It appreciated greatly, and she's like, oh my gosh, I'm going to have to pay all these taxes. Why not do an exchange on another property? So, that's what she's doing.
Right.
She's doing in
The 1031.
Yeah, 1031 exchange. And so she's not having to pay tax on all that gain. She's investing in a similar property. Again, there's different rules and requirements for that. And,
right.
you have to identify the property in so many days. The transaction has to be completed in a certain time frame. So that stuff you really need to handle. Hire, a real estate agent, an escrow company that's familiar with those type of transactions. You really need to have a CPA look at it and advise you. So, a lot of people could save money by planning their situations and consulting a professional. Anybody, it's not a rich person.
Right.
Anybody should consult a professional when they're thinking about buying a house, selling property, going into business, finding what's involved,
right.
Finding all the legal requirements in California that you have, all the things that you need to do just to be in business. And so I do those types of consultations for people, and I help them with it. I help them get their employer identification number. Maybe it's better for them to be incorporated instead of sole proprietor. There's all kinds of considerations, what I call choice of entity. How should I have my business?
Right.
What type of thing, and what are the consequences if I'm a sole proprietorship or a corporation or a partnership or an LLC? That's a whole conversation, and people should do that ahead of time, but a lot of people don't. They just go out there and they want to be in business, and they don't get professional advice.
Right.
Well, it's easy for you to make that decision to kind of get in business than for you to actually make the time to actually speak to a professional, sit down with them and have them explain these things, as opposed to buy an LLC, $500, click.
Yeah.
Okay, perfect. Credit card number. Congratulations, I got an LLC. All right, what does this do?
Exactly.
I just buy an LLC.
Well, a lot of people think that, it's only for wealthy people, that you should only go, oh, it's just a little small business.
Right.
It's just.
I'm not going to make more than $1 million a year. It's like, it's okay.
I'm not going to make more than that. Or, I'm just starting out. I don't know where this is going to go.
Right.
So, I'm selling jewelry, or I'm making this, or maybe I'm starting a blog, or maybe I'm doing. So there's a lot of things people find their passion, and they want to start a second income source.
Right.
So, but you really you should get some advice even before that. And most CPAs will charge an hourly fee. A lot of them will give, like I give like a free 30-minute consultation to people. And, attorneys are good advice too as well. You should seek out an attorney. And you really, before you go into business, whatever it is, the most successful business people that I see, they have a passion for what they do, but they surround themselves with good people, and they know the business owner knows their areas of expertise, and they know the areas that they don't have expertise.
Right.
So you have this team of professionals that are really your success team. Part of that's your CPA, your attorney, your insurance agent. These professionals all work for you. Your real estate agent, now you're needing a commercial building, or do I need to borrow out of my home? Wesley, can I refinance my home? What's the interest rate? Can I refinance that and use that money in the business?
Right.
Can I deduct the interest? Because there's a difference of now we change home mortgage interest into business interest.
Yeah.
So now those laws don't apply for those limitations now on home mortgage interest if now you're using it for a business.
Right.
See, there's just so much to know. And I started, young doing taxes, and I started doing it for my family, and I learned that formula. And then when I was in college, I had my own business doing taxes for people, for individuals and business owners, like sole proprietorships. And then I went to work for one of my professors while I was in college. And I was kind of amazed when I saw the people that were business owners. And I was like, wow, they're kind of from all walks of life, But like I said, and I'm like, wow, I always thought, I guess I had this preconceived notion, even though my father was a business owner, he owned a television sales and service. But I knew that was my dad's thing, and he knew that. But my dad he's a pretty smart guy. He's 92, and he's a World War II, veteran.
Oh, wow.
And we're going to be celebrating for Father's Day.
Yeah.
He basically surrounded himself with good advisors. But I kind of thought, wow, you had to be really smart and really on the ball and have all this education.
Right, and be wealthy and
to
all
be
that.
a successful business owner.
Yeah.
No, you really need to have a passion. You really need to have a passion and then maybe an expertise in an area to be successful at what you do, and you need to get good advisors in place and get good advice. Like I said, from that team of professionals that's going to help you on this journey and help you, grow your business.
Yeah, definitely.
So I'm really happy to be one of those professionals and be able to help people fulfill their dreams and grow their businesses, or even employees, help them in their journey of having families, and even if they don't have families, whatever people's goals are and dreams are, whatever station you are at life, people don't stay there. So, CPAs can help anybody at any station. Mm-hmm. People don't stay. Life is not stagnant. People, things change. So, so I never have any hang-ups about, helping anybody. It doesn't matter. Mm-hmm. It doesn't matter what type of occupation they do or what they do, or if they're unemployed. There's a lot of unemployed people that owe taxes. There's people in jail that owe taxes. Oh, yeah. I've represented people in jail and had to get powers of attorneys, and I've negotiated their taxes from why they're in jail. So when they came out of jail, they had that burden off their back.
Right.
Okay. Yeah. So there's people from all different walks that I'll help and I'll advise them as to related, to taxes. Mm-hmm. And I have all kinds of resources when it comes to, areas that aren't taxes. Like somebody asked me at a chamber event recently, my wife's being garnished for an SPA loan. Can you help with that? And I said, well, I deal with tax debt. I get a power of attorney, but I have attorneys that I work with that can negotiate that that type of debt. So I have a lot of resources available to me. Even sometimes I feel like, like a counselor, because I do counsel people, and this is actually a ministry to me, what my work and what I do. I'm a Christian. I'm not ashamed to say it. And I really feel God has given me some special gifts and a passion for this, and that it really, all the glory to Him. All the glory to God for everything that He's allows me to do for others. Now we're starting to get a little teary-eyed. But
that's the passion.
Yeah, that's the passion.
That's a good thing.
Yeah. So it's really, like I said, it affects people dramatically. And so it's an area that I've learned and have had a gift from a very young age. I understand very well. I've been told that I have a gift for taking something very complex and explaining it to anyone in simple terms. And so I use that to help anybody who doesn't understand tax law, wants to understand how it impacts them. And like I said, it creates anxiety, depression, divorces, addictions, because people don't understand this, and the effects can be devastating.
Absolutely.
And I know one CPA that worked under me, he told me I wanted to be a CPA and I wanted to go into taxes because when I was younger, taxes devastated our family. My father's wages were garnished, bank account was levied. We had no money. I was just a kid, and I knew that my father was saying it had something to do with taxes. We had to move. I've helped families here in Orange County that have lost their homes. They've had to move multiple times because a lot of people in the real estate industry and loan officers, when there was that big boom, they made a lot of money, and then the boom was gone. And they were self-employed, 1099 people, and when they did their taxes, they owed all this money from the past years, but they lost their homes. They lost rental properties, and when the IRS kept going after them for the taxes, they garnished their wages, and they tapped their bank accounts, and it is devastating. So I guess one thing I could say is, for people to just get help and ask if there's anything they don't understand. There's, there aren't a lot of CPAs that do this, but, there are a lot of people that care and that will let you know, what your options are and how they can help you. And, I'm here in Anaheim to help our city, help the economy, help our community, help the business owners, help the the people here with any tax issues, any tax questions, tax returns, building a business, tax planning, buying a house. There's so many decisions in life, and
Absolutely.
a lot of them do impact your finances.
Yeah, for sure.
Yeah.
Yeah, well, I mean, thank you for, taking the time out of your schedule to be with us today, and you provided so much great information. I'm definitely going to have you on the show more than once just because of so many. I didn't know your realm of expertise. When I thought of CPA, I just thought, oh, okay, she does taxes. But you don't just do taxes. Like you said, you help people solve problems. You also help people with building businesses. You also counsel people. So, I mean, you're just such a wealth of knowledge, and I appreciate you taking the time. And like I said, I'll definitely have you on the show more often too, for sure. Absolutely.
New tax reform.
The new tax reform, absolutely. Yeah, people. Definitely.
And even that, there's such a lot of changes, even like breaking it down into different areas.
Absolutely.
How it affects people. A lot of people don't know about the mortgage insurance premium that will no longer be deductible in 2018. And a lot of people are, MIP, what's that? But I had one elderly couple that did a reverse mortgage, and there was $15,000 at MIP, and they did it in 17.
Right.
Because that lady knew about it. She's a former bank executive, and she's pretty savvy, and she tries to keep up on stuff. And so she calls me frequently and asks me things. So she planned it. She used tax planning.
Yeah.
Because she heard that might be gone in 2018, and they did that in 2017. And so, they were fully able to deduct that $15,000, which saved them, about $3,000 on their taxes.
Yeah, for sure.
Yeah.
Yeah. So, as you guys tuned in, obviously the answer is you don't have to be rich to have a CPA. You don't have to. So, like I said, once again, I want to take this opportunity to thank Victoria for being with us today and sharing so much knowledge and information. Hope you guys took your notes, and if you didn't take your notes, I'm going to save this video, so you make sure to play it as many times as you need to. And if you have any CPA questions, any tax questions, any financial questions, any questions starting a business, whatever, Victoria's information is going to be on here. So you have her website, you have her telephone number, a way for you to contact her. If you have any questions, you want to direct them to me, I can definitely relay them to Victoria. As she said, she's definitely part of my network. So when it comes to a CPA or starting a business, she's definitely the main A person that I'll definitely go to. Also, want to take this opportunity to thank each and every one of you guys for your well wishes. Food poisoning is not fun, but I feel a lot better. So thank you guys very much for that. And also for you fathers out there, want to say happy Father's Day to you guys, and also want to say happy Father's Day to your father and tell him that we thank him for his service.
Thank you, and thank you for having me on your show.
Of course, definitely.
I appreciate it.
Yes, and I'll let Wes sign off with this famous saying.
Be proactive, be assertive, have a great weekend, and again, happy Father's Day to all the fathers and father figures.
Father figures, like
yes,
that.